Welcome to the video, and today we're going to be talking about Fund That Flip. Yeah, interesting name, but very interesting concept. But what is it? Fund That Flip is a groundbreaking real estate investment platform that aims to connect both savvy investors and ambitious real estate developers in one big melting pot. The idea is they're trying to connect, obviously, people that want to do development projects and flip houses and people that want to invest in high yield and really interesting short-term loans. And they come together and offer them to you. So if you are trying to develop or flip a house, you can request a loan on the site. At the same time, you can, if you're an investor, invest in that project. Thus, the melting pot. Very simple concept, and a lot of people don't want to go to banks for these things because it just takes too long. There's a long lead time, and often you won't get the best rates, especially if you don't have the best credit and if you haven't built that up, but you want to start flipping houses. So this is where Fund That Flip really can provide the best to both sides. I look at this from the investment side because I love, and as you know, if you've seen any of my videos, if you haven't, where have you been in this world? I like to look for interesting platforms, especially when it comes to alternate investments and real estate. So this, for me, is an interesting proposition because it allows us as savvy investors to find interesting projects on short-term loans, high-yield projects that allow us to be able to fund these projects and get a decent return that is better than most of the market rates, especially currently. So what does it mean for you as an investor, and what can you invest in? I suppose the best way to look at this is to jump on the site and have a look and run through the different investment opportunities that you have and what the potential returns can be for you. So let's do that. So as an investor, you can invest into borrower-dependent notes, the BDNs, and you can see here the difference between the BDN, the residential bridge note fund, and the pre-funding note fund as well. And the difference between them is fairly simple, but it seems more complicated when you try and read it. The first one means that you can invest directly into properties, different projects, and you can get the return of 10.8% on average per year return. The second one is where you split your investment across multiple different projects, so it's more diversified, so spreading the risk in that sense. Get it? And the third option, the pre-funding note, to check there, is where you fund up front and then they use your money after that to spread it out. So it's the three different aspects. Does that make sense? Probably doesn't make sense, but it's pretty easy. Invest in one property, invest in multiple properties, give them money in general, and then they use that for projects. That's how it's split up. For me, I'm interested in the first one because I like the control side of things and I like to know exactly where my money's going to go into. So that kind of makes a difference for me, and for me, that's the most attractive option. I should also mention the different levels that you can invest at. So the borrower dependent note, the minimum investment is $5,000. So $5,000 with a 10.8% return, it's pretty good. But that's the level that you need to start investing within Fund That Flip for the BDNs. And then the second one, the residential bridge note fund. The limit there, or the entry point there, is $1,000. For $1,000, that then can be split out amongst lots of different projects. Make sense? And similarly to the other ones, the residential bridge note fund, the returns on those are around 10% as well. They start at 10% as a return. So again, it's a really decent rate of return compared to most things in general. A lot of things, in fact. Most things. And as a house flipper, why would you use these guys? And it's, like I mentioned earlier, it's fairly simple. It's time, speed, and access to money. Whenever you go through a bank or any sort of lending facility that tends to be a bank, it's slow, they have things that they want you to do, and when it comes to flipping a property, speed is, the nature of what you want to do. You want to get it back on the market. And so Fund That Flip offer a number of different ways to do that in their own little packages. So they can start from $50,000, $100,000, and that can comprise of a construction loan or a rehab loan. It depends on the type of property, etc., etc. But they have little criteria you run through, and after that, you can get access to this money to flip your house or to renovate your house in order to flip it. As I said, the benefit for you as a borrower is speed. And unlike most conventional bank loans, they're longer term, whereas with Fund That Flip, they know that they're done for a purpose. They know that they're done because you either want to increase the value of your house to flip it and get it back on the market, or if you're renting it out, you'll release the capital in that and you'll be able to then pay it back. So the terms of the loans are much shorter, at about 15 to 18 months, compared to a normal bank, which would be in the years, all of them, then this, you can see the difference between them. This is a very, very much short-term, quick fix, pardon the pun, because fix houses, get it, versus a longer-term bank, short, slow offer. As a company themselves, fundthatflip have now had in loans or money that has been invested over $1 billion. And this is with projects over 36 different states in America. So they're not exactly just new and small. That's a chunk of change. And the average return on that $1 billion has been 10.8%, hence that number that they've used for the projections. So that's a pretty good rate of return. Better than mine. In fact, that has been over 3,400 loans that have been given out and equally repaid, which is a phenomenal amount. And they average around 27 different investments per investor. So again, that means that people are using it quite a lot. It's a fairly well-trusted platform is what I'm kind of getting at. So yeah. I think I'm just gonna go and invest in some property. And I know I mentioned speed previously, but honestly the difference between fundthatflip and banks is just night and day. The time it takes for you to close a loan on fundthatflip is 7 to 10 days. Now you tell me how long you think it would take to close a bank loan, and I'm telling you it will be significantly longer than 7 to 10 days. Again, speed of execution and funding that flip, I should really stop saying that, is obviously crucial when you're trying to get some return on investment for your properties. And while you might say, yes, but as a borrower, someone that is funding a project, I'm paying a higher percentage return on my money that I've borrowed, which is around 10%. That is only over a shorter period of time. So again, you pay for that speed and you pay for the ability to have access to that money as fast as possible. And you know that you're going to be repaying that within the period, which is 15 to 18 months. So the amount of interest you actually pay on that is much shorter than you would if you had a lower rate of interest over a longer period of time. So it plays both sides and it's mutually beneficial for both investors that are looking to roll this on. So what most investors will do is they will take one project, roll it into the next one, into the next one, into the next one, and just try and see whatever that initial capital injection was, and just try and return a 10.8% per annum on their investments. And as a borrower, you borrow, flip your house, pay it off, go on to the next. It's a really quite interesting concept. I like it and I wish that I could use it. As in, I want to flip a house now. This has made me want to flip a house, but I don't live in America, so I can't flip a house in one of the 36 states that they're operating in. Sad times. I should also say that this is open to the American market and American accredited investors. I need to say that because a lot of my audience are looking for things outside of the States, but I saw this in the real estate market and I was very interested in the proposition. In fact, so interested that I'm looking at how I can invest through a third party. So my third party is something like TribeVest. So TribeVest allows you to invest in things in America, and it sets up a company and allows you to invest via that company, and you can have shares of this company. I'll go into a full video on TribeVest in the future and how I'm looking to use it to leverage better investments within the United States as a person outside of that. But for now, I know that my audience does like to find things outside of the States, and this one isn't for you. I do apologize, but I do have some coming that are. So if you are interested in those, you know what to do. If you are interested in investing, please use my link in the description. You can get access to bonuses through that, and at the same time, I will get something back too. I have to be transparent. This is not financial advice, it's just for whatever entertainment purposes that you see this as. And as an investor, it couldn't be easier to sign up. Literally sign up, do your KYC. KYC is obviously your process you have to do to identify who you are, and then deposit your money and you're ready to invest. It couldn't be more simple as that. They make it as super simple as they can for an investor and for a borrower. Both processes are incredibly easy to do and take minutes to complete. Once you've done that, as a borrower, you can get access to money, like I said, super quickly, and as an investor, you can get access to those investments within a few minutes. Absolutely superb. So if you're interested in funding a house flipping project, check out fundthatflip, and if you're interested in maximizing your investment when it comes to investing in real estate, check out fundthatflip as an investor. You will get great returns. I mean, 10.8% per annum is really, really quite good. Also, when it comes to hedging your bets and diversifying your portfolio, because you're not actively investing in real estate like some of my other investment platforms that I use, this allows people to flip house projects, so it's not dependent on the actual house market itself. So obviously the demand might drop if the housing market drops, but at the same time there's opportunity for people, so why would it? And if the price of houses go down, then these loans aren't affected either. So it's a pretty good hedge, this is what I'm saying. It's a good way to diversify. And as I mentioned, if you're interested in Fund That Flip, check out my link in the description. I'll drop it in the comments as well. I'd be interested to know if you know similar platforms to this. Again, I'm really interested in these types of things and trying to share them with you. And I do promise that I am searching for ones around the rest of the world that are interesting as well and open not just to people from America. If you like this sort of thing, don't forget to drop a comment, like the video and subscribe for more. And if you really want to, then share the video with your nan. Otherwise, I'll see you on the next one. Peace.